This is Martin from Hedging, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we understand the market using the technical charts and then try to plan for a better trade for the upcoming week. So this is analysis that for the next week that's coming starting from tomorrow, Monday, June 3rd, 2024. Yes, we have the major event that's on the cards, and that is the elections. General elections, Lok Sabha elections for 2024. And we had been anticipating about the moves in the market during the previous 2 or 3 weeks, and the India VIX, the fear and the greed indicator, also was moving violently up and down, and were finally rising up steadily in the last 2 weeks. That's moving more than 100%, or 25% just in the last 4 or 5 weeks. So that's increasing, and the way the market moves during the intraday has turned from 100 points to 200 points up and down, 300 points up and down kind of moves in both the indices and both the stocks as well sometimes. So elections is a major one that happens once in 5 years, and the impact of that for the market is because of the reasons that the business needs stability in the government policies, otherwise they can't function. Any kind of hung-on or instability in the government would not attract foreign investors, neither would it facilitate a smooth business functioning. That's the prime reason of this, market speculations and volatility and all these things. So during this election times, a lot of speculative activities and campaigns, and then all of this happens through the media, through the interested parties, through the all different kinds of speculations and talks and estimations of numbers, and all this happens, and because of this the market fear and greed will create volatility. So the best trade would be not to trade, stay away. If you're a trader, stay away from the trade. Maintain no positions in the long term. Maintain long positions during the election duration, and just watch what happens, and then take a call after things settle down. And there are certain traders who are experienced traders who may try to very experienced traders who may try to they know how to manage such huge volatility in case if they know how to manage such, which they take risk and they have the adjustment mechanisms out of their experience, and they bank on the volatility crash basically, right? Because the volatility now has moved from 10.5 to somewhere 25 nearby, 24.5 or something. So that is not going to stay there, unless we have some events like COVID. We don't have. Once the election is over, it immediately crashes, right? So that time you would have the decay benefits, the theta, benefits and all that, which is what these experienced traders are banking on. So that kind of strategies and positions could be taken if you're experienced, but otherwise if you're a beginner or a novice, better to stay outside the trade and watch what happens, right? When it comes to investing, the things may be different, because we do not know the outcome. No matter what exit poll says, the final outcome is not in our hands. It's with the people of the country. How they have voted, nobody knows. And how the outcome will be there, nobody knows. So there is a big, that's why it's a major event. And when it comes to investing, if it is a long-term investing, always long-term investors would not be worried about such minor events. But with medium-term investors, then you may need to hedge your positions. There are different strategies that can help on that. According to what you invested in portfolio level, you can take option positions or futures positions, or different strategies there to manage that in case the market goes against what the popular opinion is there, or in case the market crashes down instead of moving up and breaking out. If it happens, then this hedge will take care of your losses, and your investments loss will not be affected if to the medium term position. So that's how investors and traders differ when it comes to major events like this. So if you look at the previous 4 years, you can see that the 2004 you had a Congress government, and it is pretty stable government. Means reasonable vote percentage, or Lok Sabha member percentage of nearly 30% was there. Still the market, you can see that it has crashed down huge, and then during the day, and then recovered most of that fall in the next few days. That's the kind of volatility that we can expect. When it comes to 2009, again it's a repetition of the Congress government that came. So it did not fall. It actually broke out with a very wide range bullish candle, right? So it is some huge moves can easily be seen there, and after that it pulled back a little bit, right? And 2014, when the India came, it was very volatile, right? It moved up to 6% and finally settled at 1% or something like that. 2014. So 2014 was a Modi government that came in with reasonable good majority, also good percentage of votes in the members. So even then, market did not close that great. It closed red. 2019, when the Modi government repeated, even then you can see that May 23rd candle is red. Look at the volatility. It moved up. It moved violently, nearly 3% or something, and then finally settled at less than 1%. After that, it reached the highs which it moved at that day, in the next 1 week or something. So that's why it's unpredictable how the market would behave on the poll day or the exit poll days, right? Even when it is a stable government, profit booking will come in. When the market moves up, say for example, right now it's 22,500 or 600. You can move to 23,000 and above that and make all-time highs, and then profit booking will come in, and then it can go down below the 23 again. So there is a very clear possibility, even when there is a stable government. Just like when the company has done exceptionally well with respect to the earnings, still the price of the stock goes down. That happens very often. That's the same scenario that can come in here also. So at this stage, the Nifty P is above average. Nifty has heated up. We all know that it has run a lot. It's a 8% rally that has happened from the last 1 year or so, more than that. So that's kind of rally that has happened. So it has to retrace. It has to cool off at some point in time. Probably it may break out, and then. So we don't know whether the market has discounted it already. Right? This Modi repetition for the third year stable government. We don't know whether it is discounted or already, or would it move further some more before it retraces. We don't know how that happens, but most historical charts, what we can understand is this. So right now the situation seems to be not on the downside. It seems to be upside, but even if there is an upside, there is a possibility that it can get into a correction in the June month or July month itself, because it has heated up. It has run a lot. It may go up to 40% or something, and then it may retrace. We never know. So expect that, and don't jump into long trades when the market is at very, very high. And then we have a very good event which may take it further high, but eventually it's going to correct at some point in time. Right? It has to. So you don't know how harsh that harsh may be, right? So always keep that in mind. Don't jump into at a very high point. Right? Whenever there is dips, by that should be a strategy. So that's all I have to talk about the elections. Let's move ahead and study the charts. What it shows. Now the week before the election outcome that's there from tomorrow, start coming from the next week. The last week before the election outcomes, actually market was showing some kind of selling pressure. right? If you can see there is a flat breakout, which just seems to have pulled back, right? So if this is a weekly view, we can see that market has been breaking out with cup and handle patterns and flag patterns, and it has been breaking out. Nifty and the Banknifty both were making cup and handle and flag breakouts. That's what it shows. But the last week was not that great, right? Profit booking, people don't want to take risk, would come out of the trades, and all that would have caused this small pullback or selling pressure that we've seen in the last week. Right, that's what we are seeing here also. Right, and daily charts, if you see, the last 5 days has been down, 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 and does in fact close below the 20 exponential moving average. Also, Banknifty also is not that much bearish, but except for the last 2 days. Otherwise, Banknifty also was having a gap down last week, and it was also kind of pulling back, anticipating and speculating ahead of the major event. That's what the price action is showing. So there was no pre-market peak rally breakout did not happen. So probably the breakout may happen post the elections. Right? So pre-election rally did not sustain above the 23,000. So we can probably foresee, right, that may happen after. Now candlesticks, if you study for the weekly Nifty on the left side and Banknifty on the right, so you can see that it's a dark cloud clover. It's a bearish, wide range bearish candle. Now that has made a new all-time high and trapped and created a bull trap candle. On the other side, Banknifty is indecisive doji. It's also trapped and making a move above the previous candle's high. So weekly charts that we're talking about. So this is indecisive bearishness that has come just before the outcome of the election results. The daily charts, if you see left Banknifty, it's showing a consolidation. Right? It's an inside bar. It's a small body that is indecisive, and Banknifty also, it's a small body indecisive, and it is very volatile also. Right? Very volatile. That is indicated by the wick size on both the candlesticks. So volatile, indecisive, right, and slightly bearish indices is what we are seeing. The Bollinger Bands, if you see, it reconfirms the violent consolidation that clearly we saw on both indices. There's no expansion of the Bollinger Bands on either side, and it in fact has closed slightly bearish by closing below the median on the case of Nifty. So that's slight bearish bias also, but it's consolidating absolutely. There's no expansion on either side on the daily charts of Bollinger Bands. Before coming to see the support resistance levels, this is winding. So Nifty basically failed to sustain the breakout that happened last week itself and trapped the bulls and reversed after making a new all-time high. Make a note of that. So Nifty. So finally, the candlestick was a bull trap, wide range bearish and dark cloud cover pattern candle, and closed negative near to 2%, 427% down last week. And still it's above the weekly expansion moving average of 20. Remember, we are having a 38% rally with multiple cup and handle flag breakouts and hardly 8% of retracement that has happened. Not even that, 5% in the case of Nifty. Banknifty also failed to sustain the breakout and trapped the bulls and reversed. And found indecisive, absolutely flat, 10 points up, flat positive candle. There is also a bull trap candle on the Banknifty. Banknifty also steadily being moving up with nearly 30% breakout from cup and handle and flag patterns. The daily charts, as we had seen earlier, is kind of less than 0.5% gains. It's kind of flattish, 42 points only. It's 0.20% move up, and it's indecisive with a small body and inside, but we are already seeing Banknifty also volatile at the same time, slightly positive as compared to the Nifty on the daily charts. Right, we've seen that. I'm just repeating that. So basically, there's volatile consolidation with spelling pressure seen in the week before the election. So election is a major event, and extreme volatility is quite natural, and it's very difficult to understand the properties from the technical charts and manage the positions we are executing the trades as well during this period. Make a note of that. We already covered that initially. Bollinger Bands also, we have seen that. Now let's see what are support resistance levels in the upside. So yeah, so 20, yeah, so if the government, we don't know whether the government continues, and even if the government continues, even if it is bullish, there is probability that the market can move down violently, and eventually then move up. So all these things can happen. So we just have to look at the data that is available, the charts as of now. So this is a daily chart that is saying. Based on that, the resistances can come in at 22,800 that levels where there is a gap there because of the gap down that has happened. And then after that, before that, 22,500. Yeah, so 22,800 will be the resistance upside first, and then 23,000 big rounding number, that's an all-time high, and then 23,100 all-time high, 110, 23,000 big rounding number. So let me repeat that: 22,800, 23,000, 23,110 all-time high, and then 23,200, 300, 400, 500, likewise till 24,000. So you don't know, it's uncharted territory once all-time highs there. So that's resistance on the downside. The 22,563 is the 20 exponential moving average. So that will be actually a resistance because the market is closed below that. Right. So 22,500 would be a good support, and after that 400 nearby, 22,389 is a 50 exponential moving average. That's support will come in. Then 23 Fibonacci retracement level is at about 22,100 nearby zones, and 22,000 you have big rounding number as well as 100 exponential moving average. Those are all the support zones, the downside immediately. And if that is breached, means then we would be breaking the higher high, higher low pattern, and then we'll be turning bearish. Well, supports would be only at 21,100 nearby levels where the 200 exponential moving averages. Now moving on to Banknifty support resistance levels, right? Slightly more positive than Nifty, which is a cup and handle pattern breakout that's ongoing, and the upside, the first resistance could come in at 49,000, which is a big rounding number. That resistance will be there. Once that is cleared, 49,500, then 50,000 big rounding number, and then 50, it can go as high as the top of the trendline channel at 5,500 or just below that, 5,400, 300, that zones as well. So that's where the resistance could come in. Then 51,000 likewise, uncharted territory once the all-time high. So all-time high is very close to 50,000. So major resistance would be at 50,000, and before that 49,500. Downside 48,500 nearby, 48,470 to be precise is where the 20 exponential moving average is. That's a good support. And then 48,000 is a big rounding number as well as a 50 exponential moving average. That's another support. And then 47,429 is where the 100 exponential moving average support will come in. That will also mean that it is heading towards breaking the higher high, higher low. If that is breached, then the supports would be seen at 46,379 where the 200 exponential moving average is set. Right, 47,000 is there before that, which is a big rounding number, as well as it is where 38% Fibonacci retracement levels are also there. The 48,000 support also has a Fibonacci 23 support as well, in confluence with the exponential moving average of 50. Right, so that's where support resistance is there. Make a note of these, and we move on to understanding what does the momentum and the trend indicator say. We have considered both the time frames of the higher and the medium and the short term, basically daily and the weekly are considered. Left side you have the weekly. We consider Nifty as well as Banknifty. So clearly we can see that it has it is maintaining that bullishness almost at the edge, just on the edge with respect to the momentum RSI. And daily it has lost the momentum to the sideways, but it's trying to move up. Let's try to summarize that. So it's more or less sideways momentum and rising up, except for some bullishness that is seen in the Nifty medium term. But otherwise, it's all sideways momentum that's trying to move up. When it comes to the trend indicator ADX, it's bearish all over. It's falling. Bearish, it's falling. It's rising only in the weekly on the Banknifty. Right? So the trend and the momentum is sideways. It's like it's in the bear zones and it's in the sideways zones, right, more or less, right? So in the short term and the medium term. So this would easily be taken out, and it will all cross all those ones when there is a big cap up opening on Monday based on the exit polls, or on Tuesday based on the actual poll results. right? So as of now, that's what it shows. Market had retraced, was showing some selling pressure, has lost momentum in the previous week to the election outcome week. Volatility, right? That's the star of the previous 1 month. Volatility has been spiking up nearly 125% for the last 5 weeks, and it's at 24.6 from the 10 point something. Extreme volatility, and it's 13% hike that has happened just in the last week. High volatility regime, we have to be extremely careful. Premiums will be high. Of course, the option selling seems like, things are in favor because it's a spread of implied and realized volatility is 135%, IV percent is 100 and all that, but there's a high risk of the volatility. Right? It can move up and down the same. Right? The premiums may be there, spread may be good, but no, you have to take the risk for option selling to be done at this stage. So you have to be extremely cautious. Now, another interesting thing is the futures option interest is showing there is a short covering build-up that is happening. Right? So it can be a big short covering. Right? Huge short portions are created because of some media news that came that predicts that Modi may not, the NDA may not make that. It may be a hung parliament and things that some news comes in and that people speculate. So big short covering rally can come in that can break out. And futures is positive. Now for the June 6th and June 9th, June 5th expiry of the Nifty and the Banknifty respectively, the ratio is slightly bearish. Not slightly, it's kind of bearish in the case of Nifty, but it's bullish in the case of Banknifty. This may not have too much of relevance when we have a major event weeks. That's in Monday and Tuesday next week. 2 days, big major once in 5 year event. So these are all things that can be taken out just in a matter of a day. Less than that. Option interest as of now is showing that 21,000 and 23,000 is where the highest put and call writing is seen. That's where the supports are there. People are betted. Option writers are betted likewise. Second highest support is at 22,000, 24,000. See the range of speculation. Look at Banknifty, 40,000. That's 8,000 points below is where the highest put writing is seen, and then 50,000 for the call writing is seen. That's why support is seen as of now. Second highest support resistance is at 48,500 and 51,000. That's also a wide range. So that's speculation that is seen in option interest, obviously. Now looking at sectoral watch, as we've seen, it was all down day across all the major sectors last week. Nearly 1.86 kind of fall. It impacts profit bookings, fear of getting out of the trades, and all this happens across the sector. That's what we're seeing. It's 4.3% down. The IT metal is 2% down. Auto sector is 2% down. Pharma is nearly 2% down. FMCG 2.5% down. Realty is the only sector that may be in a position where there is some bullishness in the both time frames. Otherwise, all the other sectors just need to wait for long positions because more time frames are not bullish with respect to the RSI momentum. That's what is clear as seen there. It's a cup and handle, but it's breaking down. Right? Nothing has fallen. The sectoral indices, if you see, nothing has fallen below the RSI individual zones yet. But yeah, it's sliding down as of now. And at the all-time high levels, you can see the metals also. All-time high levels, bullish momentum rising up. In the medium term is what you're seeing for the auto at the peak. Waiting for a flag breakout is for the pharma that's consolidating, still having bullish momentum in the medium term. And from CG is consolidating and slipped low sideways and falling. Reality is at all-time highest bullish momentum and then trying to hold on, hang on there. That's what it's seen. Now the next factor that we consider is the industrial heavyweights that contribute maximum to the index. Not industrial heavyweights, I'm sorry, index heavyweights. Those stocks that contribute maximum to the index Nifty 50. HDFC Bank is showing a possibility of a flag breakout. Going easy, but momentum is still sideways. Long way to go before it touches the 1,700. But as of now, sideways rising. Lands was trying to move little zones, but kicked down, back in the sideways, falling. Some kind of consolidation, potential flag breakout. We're talking about medium term RSI. HSBC Bank, RSI above 60, only stock that's maintaining the bullishness. It's a red week, flat. Indices see red candle is seen as of now weekly, right? But it's the only bullish stock as of now. Infosys, another red week, but not falling with the bear zones, maintaining the sideways falling. TCS maintaining the sideways falling. It's a potential flag if it managed to hold this level. But banks moved down, broke with major consolidation and then climbed back and then again green. But still, momentum is maintained the sideways. ITC flag pattern in the formation, momentum sideways. So only stock is ICICI Bank, which is bullish. And the heavyweights are all sideways. All industry heavyweights are sideways. Remember that. Mid cap, small cap, mid cap red, small cap red. But look at the momentum, they're all bullish. It's at all-time highs. Time for caution. Consolidation seen on both, but at all-time highs. Not ready to give up. March had a big dip, but it was all taken out and then market broke out once again. Overheated, but not ready to go down. Institutional participation, you see, four institutions have been continuously selling 7,755 crores of selling in the cash market. Domestic institutions are trying to buy double of that, 14,935 crores of buying. So the derivatives are also moved on to the case of FIDA's data, right? So there is some bullishness that is seen from the retailer side, otherwise FIs are bearish on the options and slightly bullish on the pro traders are slightly bullish. So that's speculation that you're seeing there, right? So yeah, the FIs continue to sell. One day they buy 4,000, next day they buy sells double of that. That's kind of moves. You can see that in the figure. See. Right, in the last 5 days, it was 3 days of sell and 2 days of buying. So whatever they're buying, double of that they sell, more than that, right? So big selling. So as long as the fire selling is not stopped, markets cannot move up steadily. Move up steadily. It is just because of the mutual fund money that the market is moving up right now. Imagine the case when the FIs are also buying, market can short up like anything. But as of now, FIs are not willing to do that. Now, in this section, we're trying to see the global markets, the global commodities like gold and oil, and then currencies. Let's begin with the currencies. The dollar, red again, 0.13% down. Good for emerging market like ours. It had earlier moved up 7.5%. It is consolidating. You can see that here. It's a cup and handle breakout, but the breakout is not happening. No, it's not. So always cooling off is good. USD/INR is not cooling off. It's moving up 0.5% up, 83.4, and it has been maintaining these 83 plus levels for a very, very long time. Just because the Reserve Bank is managing that. Neither it is falling down. It's an ascending hedge for ages, waiting for a crackdown or a breakout, which never happens. Rupee remains very weak because of the same reason. Crude oil is retracing, and it's at the trend level at the 77 nearby levels. It was trying to break out above the 80, but it didn't work out. Again, good for an oil importing country like ours. Gold, not too far from the all-time highs, but seems to be making some consolidation out there, waiting for another breakout, right? The moment is bullish, keep that in mind. Right? Gold spikes up and breaks out when the market crashes most of the time. So hedging instrument gold has always to be in the radar. Right now it's not that far away from the all-time. I'm from the all-time high. 26% or 30% of breakout moves have happened in the recent past. Now we have to see the US market. The global markets would mean the US mother market basically, primarily. Dow Jones, Nasdaq, and S&P 500. Dow Jones has moved down big time and then recovered half of that, and seems to be consolidating, as you can see there. Right? Potential flank breakout was expected, didn't happen, hit the all-time high and then retraced. So it's a red US markets across the Nasdaq and S&P 500 also. Red can be seen here, all-time high, not very far from the all-time high, it's supposed to think. Bad thing is that we just closed the red candle with 2%, half a percent on the S&P 500, 1% on Dow Jones, Nasdaq 1.5%. But momentum is bullish and it's falling. So it's a 2 to 3% of fall from the top that has happened right now. So while the market is red, you have to be cautious. Probably it may lead to some more retracement, which may reflect in our market as well. But Fed events and interest hikes and all that could change that to breakout as well on the upside. You never know, but as of now, global cues are not that great, right? Because US market's showing red, gold is not very far from all-time highs, and rupee is not dollar index. Rupee is weak, and dollar index is not that is not falling as much as we expected, right? No big bad cues, but not that great cues also globally. If you look at the global markets and commodities and currencies, right? So that's about that, and let's move ahead with the actionables. One is 2 stocks are there for the next week. You can stay out of doing this, and if you want, you can. But Motherson, Samvardha, they changed the name or something, but Motherson is automobile stock, primarily auto sector stock. It's having a momentum bullishness and trend also with bull zones and breaking out of a rounding pattern. This may be the last opportunity to enter if it is breaking out. I have tight stop losses, but right, so a 2% risk reward, we can trail. Exile Industries, EV story, flag pattern consolidation happening. The moment it breaks out, if you can catch that for a 2%, it may be big breakout volumes are seen on both trend and momentum, all the bull shows on the medium terms, right? Those are the reasons for the trend, right? Samvardhana, Motherson, and Excite both long. Now this is an optional strategy that can be played out in Nifty weekly next week if you want. This is a long straddle, or long strangle basically, right? Long strangles, completely hedge. Basically we are selling and buying, right? We are, it's the opposite of the short straddle. Because shorting, we are longing the right. So we can make of that. It's a one single strike of 22,800. That's call and put. Both of that is both of that is bought. And so selling it at single call and single strike call and buy. We are buying it instead of selling as in the short straddle. It's a long straddle, so we're buying it and then we're hedging it with 23,100. Slightly above. We are hedging on both the sides. So in case the market is not likely to stay in this small narrow range, market is either going to break out or going to break down because of major events. So there's high probability of winning, and then risk but maybe less, but play it safe. Increase your portion size as per your capital size. So that's possible. Less margins, increase the lot size as per your capital size, but yeah, play it careful. Yeah, but the risk is defined. You know what you'll lose. It's not a great risk reward trade, but come out of that immediately after the election event. No, probably. Or you can play it. Yeah. Once the election event is over, if you take the positions, you may not have anything left. So this is high premiums are there. That's why you're getting this range and this risk reward and all that, right? Not a great risk reward thing, but just an election play strategy if you want to play out. As long straddles are played when we expect big moves on either side. Which side we don't know. And we give a small range, and then if it breaks out of that by the side, you will make profit. Down or up. That's the strategy. Let's try to wrap it up. Market failed to sustain the breakout from the previous week. And this week also it made the all-time high. It didn't sustain that. And then it reversed. It grabbed the bulls thereby, and then it is highly volatile. Just last week before the election result, all the speculation is happening, and in between lost momentum in the trend it had gained earlier. And in fact, it closed below the 20 exponential moving average as well. Remember, we're in the middle of a rally of 30%, breaking out of different bullish patterns. The free factors, if you're back in favor of the bulls and the bears, you can see the price action higher low is still maintained in the bulls. But then small cap analysis at the all-time high. They're showing red, caution, but at the all-time high still, in spite of all this drama. Heavyweight stocks are all sideways or bullish, none of them are bearish. Crude oil, dollar, somewhat in favor. US market is also not very far away, even though it is close red with 1% down, it's still very close to the all-time high. Put call ratio is actually bullishness only in the case of Banknifty, not in Banknifty. And this is short covering built up with seen and the futures upper interest. So all positive factors in here. Bulls and bears, if you see, in Nifty closing less than the 20 expansion moving average, not great. Wide range bearish, dark cloud core, Nifty weekly candle pattern is not that great. Industry Banknifty candle also doesn't look nice. Very high India weeks rising up. Big spike, market rise up. And all this are not favorable as I had earlier said. FIs have been selling more forever. Right? That's the only trouble that we have. Pre-election volatility, we have to be careful about that. Right? And we are at the very top of the trend line, and market may consolidate after it hits that 50k. It can retrace. It should be aware of that. It hit that and then retrace. Right? So there can be resistance. Since it's a resistance zone of a big rounding number, be careful of that. So that way, that also comes in favor of the bears. Now, just repeating. Market had been volatile and it has been consolidating. It faced selling pressure the last week and closing this even slightly bearish, trapping the bulls just before the election outcome week. And it may be very difficult to predict and make probability studies from the charts when the market is facing a major event. Right? Technically, market is consolidating with volatility. And market views is sideways and neutral, right? As of now, but we have major event, it can be a gap up and it can break out and all that. But charts are showing this as of now. They're not giving an indication of a big breakout except for the short calling and the open interest. So always, keep in mind that at 20,000, 40,000, if it is maintained, probably it's still consolidating. And if that is not the case, it may be retracing or breaking out. For the next week, it may be 22,500, 23,500 may be range for the Nifty, and 48,000, 50,000 may be range for the Banknifty. Stay out of the trade if you're an officer. I've always been saying for the next 2 days, Monday, Tuesday at least. The day of week may be all time, so better to stay out if you're noise, and then let things calm down, let the premiums cool off, let the wicks cool off, and then we can get back to business. So that's when wins always. Taking all the profits of 4 years in 1 year or 1 day. 1 year or 4 years of profits can be taken out in one single day in a matter of 50 minutes. That's the danger of the options and derivatives. So be aware of that. As always, hedge, as I always say, protect, even if you're taking positions, so that you know at least how much you'll lose max and still in the game. Right? Have a look at the different option strategies, separate playlists. Check out that as well. That's all I have. Subscribe if you like, and put in your comments and share it to others. Subscribe to the social media channels as well if you'd like to get regular updates ahead of the weekend. That's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye-bye.